Hey now, by the end of this video, you will know exactly how to trade this profitable 1-minute scalping strategy that a viewer requested and I specifically designed for use on mobile devices. I am going to show you how the system works and performs over a series of 100 trades. Then I'm going to review the equity curve and give you my thoughts on how we can make it better. Let's get into it. The system I'm going to test uses 4 free TradingView built-in indicators. The first 3 indicators are all exponential moving averages based on the Fibonacci sequence. The first EMA we are going to put on the chart is the 21, and I'm going to color it in yellow. This will be used for our trigger. The second EMA the system uses is the 55 in orange. This will be used for our stop loss level and trend direction. The final EMA period is the 144 in white. This will also be used for trend direction and stop loss level. The fourth and final indicator we'll put on the chart are Williams fractals. We will use fractals to signify a possible setup. Now let's go to the charts. If you like this content, be sure to subscribe. This chart is Bitcoin versus US dollar. On this test, the rules for a long entry are: price closes above all the EMAs. Enter when price closes above the 21 EMA with a fractal, while EMAs are stacked in order, meaning the 21 is higher than the 55 and the 55 is higher than the 144. All of that happens on this candle here. That is our trigger candle. We have 2 options to place our stop. If the candle where the fractal appears is above the 55 EMA, we place our stop at the 144 EMA. Or, if the candle where the fractal appears is below the 55 EMA, then we place our stop at the 55 EMA. So in this example, because price dips below the 55, we are going to place our stop at the 144 EMA. So on this test, we're actually going to examine 2 take profit levels, a 1.5 to 1 and a 2 to 1. Stay tuned to the end to see which one gives us a better gain on account. Let's see how this plays out. And this one hits 2 to 1. We have one more long example. Again, we have price closing above all the EMAs. Then price pulls back into the EMAs. We enter when price closes above the 21 EMA with a fractal, while the 21 is higher than the 55 EMA, and the 55 is higher than the 144 EMA. All of that happens on this candle here. That is our trigger candle. As a reminder, we have 2 options to place our stop. The first is the candle where the fractal appears is above 55 EMA. We place our stop at the 144 EMA. Or, if the candle where the fractal appears is below the 55 EMA, then we place our stop at the 55 EMA. So in this setup, we're going to use the 55. So our profit target here will be 1.5 to 1 and 2 to 1. Let's see how this plays out. And this one hits 2 to 1. Now we flip to shorts. This is what I will test for shorts, which is the opposite of longs. First, we are looking for price to move below the EMAs and then come back into the EMAs. Second, we are looking for price to close below the 21 EMA with a Williams fractal, and for the 55 to be above the 21 and 144 to be above the 55 EMAs. Everything coalesces on this trigger candle. We can see the candle with the fractal is below the 55 EMA, so we will use the 55 EMA as our stop level. We target 1.5 to 1 for test 1 and 2 to 1 for test 2. And this one hit 2 to 1. I'm going to show you one more short example before we get into the test. On this example, we can see price moving below and then coming back into our EMA ribbon. We get a fractal and a close below the 21. This is our trigger candle. The candle with the fractal was above the 55, so we're going to use the 144 as our stop. And we are going to target 1.5 to 1 and 2 to 1. And this one hits 2 to 1. Be sure to stick around to the end of the video where I give my thoughts on making this strategy better. And now it's time to do what I do. I want to thank MKFBS for requesting a system that works on mobile. This was my inspiration for creating this strategy. When I think of mobile users, I picture a chart without separate indicator windows, so all the indicators appear over price action that you can see on a smaller screen. In addition, with small time frames, you can take trades fast when you are on the go. Remember to subscribe and enable notifications so you know when our next installment is released. Now let's review the two sets of data and go over a couple of ideas on how to optimize this system. The first test was setting a risk to reward ratio of 1.5 to 1. This test was done on Bitcoin versus the US dollar using the 1 minute time frame. There were 56 that hit target 1 and 44 that stopped out, for a winning percentage of 56% over 100 trades. It took a brisk 4 days to find those 100 trades. Risking 1% per trade, the gain on account was 40%. The equity curve on test 1 starts out with a huge impulsive move, followed by some consolidation, and then another smaller impulsive move up, followed by consolidation, and then the last few trades, again, looks like a start of another impulsive move. So you can see from the equity curve that this system has some impulsive moves, followed by some choppiness, probably due to ranging markets, and then again impulsive when the trend continues. Now let's review our second set of data. There were 44 winners and 56 losers for a winning percentage of 44% over 100 trades, and risking 1% per trade, the gain on account was 32%. So you can see here that the equity curve on the second set of data starts out again with an impulsive move up, followed by a consolidation period, and then a much smaller impulsive move up, followed by some consolidation, and it kind of ends there. So comparing these two different methods of taking profit, we can see that on this particular set of price data, that using 1.5 to 1 actually increased our gain on account more than using 2 to 1. But I will warn you that we are only using 4 days of test data, so it's a very limited data set. And the other thing, which I will get into in a minute, is that this does not account for fees or spreads. How do we find the crumbs to optimize and make this system better? Try this system out on larger time frames, especially if you take this system from the crypto to the Forex charts. Larger time frame charts have less noise and are less susceptible to rogue wicks and odd market behaviors. Number 2, watch out for the fees. There are crypto exchanges that give you commission-free trading if you use limit orders. Because the movements on the 1 minute chart are so relatively small, you want to make sure that your profits aren't eaten up by those fees. Third, and most importantly, this is a very limited data set. We only have a few days of data here, so don't go out there expecting the same results if you start trading this. You will need to do the testing yourself over a much larger data set to get a feel for how it will actually perform. Let me know in the comments how you would make this system better, along with any other questions, comments, concerns, or video ideas. Bye for now.